Hello again, everyone. This is Joe Henches with Beyond the Chart, your source for exceptional video analysis of stocks, ETFs, and indices so you can become a better trader. Welcome back. Today is Wednesday, August 12th. We're going to take a look at the market action of the last 2 days, and we're going to look at the international Germany, India, China, and indicators and a couple of key ETFs, and then 4 stocks tonight: VipShop, SolarCity, Alibaba, and Melco Crown Entertainment. Okay, let's start off here with the Dow Industrial. So on Monday, we had this big rally, big pop-up, counter-trend rally, and on Monday night, I said we've got to see whether we get any follow-through. We didn't even break the high of Monday on Tuesday. We opened down and then continued down, broke the low of Monday, and then had the sell-off continue today. And of course, you know, the catalyst, partly anyway, was the China news and the China slowdown over the weekend, and then the China devaluing its yuan currency, and so now, you know, here we are, sold off real deep. Then we get this big reversal. Now the Dow didn't close up, and you know, some people are calling this a hammer. I think it's more of a hammer on the S&P 500. I would not call this much of a hammer to me at all. It looks closer to you know, a long-legged doji or whatever you want to call it. And I don't put a ton of weight into one-day type of candlesticks, you know, candles. You know, the key is, do you get a follow-through? What happens? You know, it's you know, and I know you hear me say that a lot. And anybody who's been around is going to say the same thing. S&P 500, we did close up a little bit today, up 1.97. So we were kind of mixed. After all that, it's kind of funny if you just tuned in at the end of the day, you'd say, well, wow, what happened today? You know, there was a lot of action, a lot of you know, trying to say tumult, and I can't say that correctly very well, I don't think. And anyway, it went all the way down here. This is the 233-day moving average, and I know a lot of people use the 200-day moving average, and the S&P got down below there. Notice how on the 233-day back on July 7th and July 8th, it came almost exactly right to it and then reversed off of it. Today, it broke down through it a little bit and then reversed back up. So, you know, everybody's talking. You know, I listened to some guy at the end of the day talking about how, you know, bullish scenario this was, and how, you know, yeah, we're going to rally now. We're going to go new highs, and I'm just not convinced. I mean, you gotta see a lot of stuff. I mean, we've seen bars like this before. Look at this candle right here on July 7th. That looks pretty bullish. Well, then it came back down, and yeah, it did turn back around, and we rallied again. I don't know. We're getting a lot of whipsaw is what we're getting. A seesaw action back and forth, back and forth. Now, the NASDAQ Composite continued down and was looking very, very bearish here. We're, you know, breaking to, you know, taking out the lows back in here. And then we got this reversal today. So again, is the reversal going to hold like it did here on July 28th and rally for a few days or a week? We'll see. You know, again, you know, we got to have the follow through. New York Composite, similar type action. The Composite was down today, down 22.6 points. So it wasn't strong enough to come up. And again, this is not some kind of bullish engulfing bar. Okay, it's not like this candle where really came all the way down, went to low, came back up, broke the high of the prior day too, and then closed really above the high. I mean, the more engulfing you get in the terms of the type of the candle, the more importance I give to it. Or if it, and I don't see an example right off the top of my head, but if something comes back and penetrates the prior day's action, and if it would have closed above the middle, let's say, of the prior day's action, I would have been a little more thinking that, okay, you know, maybe something really strongly bullish is going to happen. But again, it's, you know, the real tail of the tape is going to be what happens tomorrow and on Friday. So similar type scenario here on the Russell 2000. Now on the Russell 2000, we're down. Well, we're into the February range here. We're not close to breaking out the January, February lows. Although on the Dow, I thought we were Yeah, we were getting close to that. This January low today, I really was beginning to wonder whether they're going to take this out. And let me, this support I've got in here with the December low and the January low, I think this is pretty key. And that's going to correlate on the S&P 500. Probably this March, this first segment in here, 2040 to 2045, that's got to hold. And we didn't quite get there today on a test. Again, this is going to be the next critical area. And if we break down through that, then we're going to be testing this area down here. All right, let's take a look at what's happening with Germany, the German DAX. So remember, we thought we were breaking out of this downward channel here, broke out, thought, okay, what does this mean? We're going to go back up and test new highs, and then we pull back down. Kind of a little bit of weaker rally, and then boy, look at the last 2 days here with Germany, just falling out of bed and breaking down to new lows, and didn't quite come down here to the July lows, the early July lows, but we'll see what kind of action we get tomorrow, but that's looking pretty negative. India, same type of action. Last 3 days in India, pretty negative. Now, I was starting to wonder if this whole, I thought we were getting ready to do a fifth wave, and I'd had originally a fourth intermediate wave down here on the Nifty 50, and I removed that because I'm just not sure this is done yet, and this is starting to just look like still overlapping corrective type waves. And you could draw a trend line. I drew a trend line across this low here and this low here, and it looks like a little bit of a topping formation. I wouldn't be surprised to see we break down through this, then it's going to come back down. It may come back down and test these lows. So so India's it's struggling to get moving higher again. Let's take a look at the Shanghai Composite. Everybody's focused on China, and rightfully so after all this move and everything that's happening with China and the impact and the commodities and all that stuff. But it was down a little bit today, and I say a little bit, but it was down 41 points. And I think the real test is, does it come back down here and break this trend line? We break this trend line, we could get a pretty strong little swing move down. And when you look at, I think I have the Hong Kong in here, the Hang Seng index from Hong Kong. This is, actually looks a little worse, than the Shanghai Composite in terms of where it went on this low back in early July. And then if we zoom in here a little bit, you can see that it looks to me like it broke down through this counter trend type of trend line rally here. And last 2 days are stronger in terms of a negative than what's even showing up on the Shanghai Composite. All right, and then the last one I want to take a look at is the Emerging Markets ETF, the MSCI Emerging Markets ETF, EEM. Look at the damage that's being done in the emerging markets. Okay, so you can see a lot of this related to commodity type action and everything, but boy, this is just really, really in a strong sell-off, strong downtrend, and I'm trying to see where it's at 4 year. It's hitting 4-year lows. It's back into this trading area right here in 2011, and you break down through that zone, and then you're just you're into all this area down here. So kind of a large sideways move that it seems to be breaking down out of. And that's it for the international markets. Let's take a look at the indicators. Our short-term trading index. There we go. Okay, not a whole lot new here. The trend is 0.81 for the day. 10-day moving average 1.06, right in the middle. The VIX really had a head of steam on it today at one point. You can see how high it got. It actually got 1/100th of a point higher than this point. So basically it came up and kind of tested this point and it sold off. And, of course, it's selling off in the market. When the market is rallying, VIX is selling off. But pretty dramatic move here today, pretty dramatic 2-day move. And, of course, that's what's happened, when you just kind of mirror image of what's going on in the markets. And the next one is the high-low index right there. And I've talked about this picture. I mean, this just looks like, it's not confirming any type of bullish action. It just almost looks like it's rounding over. So we pulled back down here, 189 more new lows, 52-week new lows than new highs for the day. And the last one we'll take a look at is the McClellan oscillator. That's back here on the New York Composite, and that's right in here. And so we're at like right minus 19 or something like that. And I think the official guys that put this out, the McClellan financial folks, it was like minus 16. It all depends on your exact reading of advanced decline and volume, advancing volume, declining volume, that type of thing. But this is pretty close. So this is the picture. The picture to me is that we're kind of in neutral zone right now. We bounced off of this oversold, but that was July 27th. And we haven't really gotten to an extreme reading in terms of overbought or anything. So to me, we're kind of in neutral land on the McClellan oscillator. All right, let's take a look at just a handful of ETFs real quick. The high yield bond fund broke to a new low today, broke below the December low. So again, this is at 4-year lows. This is hitting now intraday lows that was hit in 2011. And the next one is TLT, and the bond fund. The bond pulled back today, kind of a reversal down, but you got to watch the individual daily action, because look how choppy this is. Up, down, up, down, up, down. But the trend, short-term and intermediate trend, has turned higher here. We'll see how far it continues to push. And that's the story on the TLT. And the next one is the dollar. Here we go, U.S. dollar index. And that dropped today. Dropped down some. So again, I've got this question mark here because I am questioning, kind of like the other one we just talked about, where overlapping India. I was talking about kind of like this, where we're getting this overlapping push sideways and we're not getting the thrust higher like I thought. So I'm a little skeptical about what's going on here right now with the dollar. The picture's getting a little muddier. And next one is oil. And of course, if the dollar was down today, and a lot of times, dollar's down, oil goes up. Well, oil, on U.S. oil anyway, barely went down 5 cents, and I think on the crude oil on the futures it was up 23 cents. 43.31 is where it's at on the West Texas Intermediate. And then the last one of the ETFs is gold, GLD, and gold popped again today. It's up $17 an ounce, $11.25 on the futures. And it looks like GLD is getting close to closing this gap. And I identified this a couple videos ago, either Monday or Saturday, I can't remember which. And we'll see whether it does it and how much further it pushes. I'm still thinking this is counter-trendish, but we'll see. And all right, that's it. Let's take a look at our 4 stocks tonight. 3 out of the 4 are Chinese ADRs. And let's take a look at VipShop. Boy, VipShop got killed yesterday. Look at this drop in the volume on this, 39 million shares. Big volume, big drop down in 1, 2, 3-day drop. And today's these 4, by the way, this was up 5.1%, and it was the biggest percentage winner of the stocks I'm following. And I expanded my list a little bit, kind of broadened it out some. So I've got about close to 60 stocks on my list now. So of the 60 stocks, 60 or so, let's say, this was the biggest percentage winner, up 5.1%. And this looks to me like a snapback rally to this trend line that it broke yesterday. I really don't see reading anything more into that. Although, let me look aside. I just saw something here. Did this close below this low? 18.34. Slightly below this close. I mean, you could get there's like a counter trend setup. We may get some follow through. We'll see whether we do out of this or not. And all right, the next one is SolarCity. And SolarCity, wow, look at this from up here. 1, 2, 3, 4 days down from 60.17 closing yesterday at 48.79. It came down, and I remember identifying this when it stopped right here during the day on Monday, and I thought, okay, this has got to hold, and it didn't, and then it came back up and closed right at it. And then, of course, Tuesday it does this, or Monday, I'm sorry, this was Friday. Monday, Tuesday, and then today, this reversal bar. Now, this looks a little more engulfing to me, okay, in terms of an engulfing candlestick type of reversal. This looks like it's got a chance, and we'll see. It's got to take out the high, and it's got to go. The low's got to hold, but that's a heck of a range. I mean, what is the high and low in here? It's about a 5-point range, yeah. $5.10 between intraday high and low on SolarCity today. All right, let's look at Alibaba. And I believe Alibaba's earnings came out, I think it was yesterday. Can't remember. I didn't exactly see the announcement. But anyway, last 2 days got walloped, broke this trend line. I'm kicking myself for not staying in here. We got nice, actually I got stopped out on this little counter trend here. Shame on me for getting stopped out on this move. And I'm really pretty ticked about it. But got to move on. And so we got a nice move. Hopefully some of you guys were in this and stayed in, because this is a nice move. So I'd be watching to see if you're using Keltner channels like I am. I'd be looking, if I was still in, what I'd be looking to see, do I get another close below the Keltner channel? Then I would, if I got 2 in a row, then I would set a stop at the prior day high and just keep lowering that stop if it stays like that, or let it take me out. So that's kind of the play that I would do. I'm not in it, but that's what I'd do if I was in it. And Melco Crown Entertainment is the last one. And again, this has been one heck of a complex, messy correction that just keeps coming on down and, coming on down. And I really think, I thought it might stop right here. We'll see. I'm not sure I like the wave action that I'm seeing in here. Then we get this close back down. I mean, look at this 2-day sell-off here. If this trend line doesn't hold here, that's going to be negative. I mean, it's going to be counter trendish again. And I must say, I am really going to have to, before I put on calls again, I put on some call positions and basically pretty much got my head handed to me on several of them, or a couple of them. Not super bad, but I didn't like it. And, in this environment, it's just like the odds are favoring now. It's like everything seems to be turning. The odds are favoring things to the downside, and the risk is to the upside, because it just, you don't know. I mean, look what happened to GoPro, and over the last 2 days. I mean, just like, wow, just walloped it. So anyway, we'll keep an eye on that kind of price action and broaden out the list a little bit. So we'll see what happens. And I'll be back on Saturday with the weekend update, a little more detail, and we'll look and see how the market acts over the next 2 days. All right, this has been Joe for Beyond the Chart. Thanks for stopping in. Have a great Thursday, Friday, everyone.